Good afternoon. You're watching Finweek Money Matters. My name is Samantha Loring. This is the show that helps you manage your finances. Well, coming up on the show today, we'll be talking about South African innovations making it big on the global stage, including an invention that recently made an appearance in Grey's Anatomy. We look at investment fees and what you as the consumer should be paying for. And in our entrepreneurship segment, we discuss how mobile phones are changing the way we market to potential clients. If you have any comments for us or any feedback on the show, you can send them through to moneymatters@abn360.com. Well, stories of South African innovations making it big on the global stage may be few and far between, but in Finweek's cover story this week, Bruce Whitfield looks at the Lodox machine invented and manufactured locally and how it came to end up on the ER of a hit medical drama, Grey's Anatomy. So joining us in studio, we've got Marc Ashton, Finweek editor. Bruce Whitfield is joining us to discuss his findings, and then Pieter, CEO of Lodox. Pieter, thanks for joining us. So I met you 5 years ago, in fact, when you were first the CEO, or you first stepped onto the stage as a CEO of Lodox, and did a story on Lodox. I wasn't able to give you the exposure that Grey's did, but tell us how the machine ended up on Grey's Anatomy.
I'm really glad to make it back. Luckily, I've got a new suit. We were very fortunate to be on Grey's Anatomy. We've got a machine in LA County Hospital, which is a big emergency center close by Hollywood. And the story is that the producers from Grey's Anatomy was looking for that research to revamp their ER in the Grey Sloan Memorial Hospital, which is a fictitious hospital. And that was one of the hospitals they visited, and the doctors there are so in fame with our machine, and our machine is so good that they said, if you do not have this machine in your ER center, you do not have a proper ER center. Mm-hmm. And that's how we came. And then they phoned our US office phoned us, and I said, well, what's it going to cost? Because Grey's Anatomy, we all know how big it is, and they just say, no, they want the machine, it's going to be for free. And then they sent us a script. And everybody's seen the show by now. It's like a 1 hour ad, and we didn't pay anything for it. So we were very fortunate.
And I mean, you've been able to unearth what the value of being on Grey's Anatomy is to a company like Lodox.
Isn't it amazing, Sam? Because here we've got a company that's yet to turn a profit, that's produced only 40 of the machines that it makes worldwide, 13 in South Africa, 14 are in the United States, and there are others scattered throughout the Middle East and other parts of the world. You've got to be insane as the editor of a magazine to put a story like this on the cover. But why does it go on the cover? Purely because, and sorry for you, it went on Grey's Anatomy. You know how you've added to the fountain of knowledge on the issues.
I did identify it certainly as a new invention in South Africa. And
you were the first. Okay. But you know how James Bond and the James Bond movies will go, yes, the time on my Omega is. That's all product placement, and movie producers make a huge amount of money out of product placement. You can see it blatantly, and it's quite annoying. It's in your face. It's invasive. Now, if you watch the particular episode of Grey's Anatomy, which was 10 days ago, you would have heard them mention Lodox 13 to 15 times. One loses count after a while. And you start thinking, hold on a second, this is a very expensive advertising campaign which has been launched by the guys at Lodox. These guys must have Lodoxes of money, deep pockets. In truth, as Pieter says, this is a device, a scanning device, a full-body X-ray machine which does an X-ray in 13 seconds. It's a life-saving device. It makes emergency rooms that much more efficient, and it comes and emanates out of the South African diamond industry. This is a story, if you'll excuse the pun, that has many facets, just like the diamond industry itself. So here we've got a situation where a little South African company funded by the IDC, yet another success story for the IDC, and the IDC doesn't get much
press. Well, they haven't
press.
made money out of it yet, so that's the cog that is missing.
But this is why we put pressure on Pieter now. We say to him, right, you've had, effectively, spoke to a man from the media shop, the managing director of the media shop, and said, what is this exposure worth? And he says, well, look, you've got Grey's Anatomy, which is syndicated to 220 channels around the world. In the Grey's episode alone in the United States, flighting a 30-second advert costs $200,000. Now, assuming that the value of an endorsement is worth 3 times that, and then you've got 15 endorsements, what is the value of this thing? It's actually so difficult to quantify. What Lodox has got in quite a credible, the storylines can be quite dodged, but in a credible ER setting, in that environment, they've had the biggest punt of any South African innovation probably in history. and they better make this work. and sort of the cover is, here you've had this great leg up, now let's see what you can do with it.
I mean, this is, all any inventor could ask for in South Africa, being, put on the global stage. And as Bruce says, you've got doctors basically saying that, it's something that people should be buying and using. Has it helped at all? I mean, are you getting orders in? What's the next step?
We haven't received firm orders in yet, but we've got many, many inquiries, and we're definitely being put on the map, and people understand now who we are, what we do. You said earlier we haven't made any money yet, but I think the important thing with innovation like this is not the amount of money you make, but the difference you can make to the healthcare, specifically emergency healthcare, and then forensic healthcare, which is always forgotten because people don't want to talk about it. But we make a huge difference in that, and innovation is not only in the technology, but also what we do for emergency and forensic care. So by people knowing more about the machine, we get more inquiries. It's very, very difficult for a company our size to be out there. We compete with the big boys globally, GE, Siemens, Philips. They've got millions of dollars or euros that they spent on this, and we just can't compete. So something like this for us is really, really good. And the script on Grey's Anatomy, like I said before, finding the marble, doing the patient, that's all things that you do in the ER setup. It's a real thing that you can do. It's not fictitious.
But you just need to tell us very quickly, because we have alluded to it, but why is this machine so special? What sets it apart from any other X-ray machine, and why is it worth $500,000?
Okay, this is the only machine in the world still that can do a large format X-ray, a full body X-ray from head to toe, in only 13 seconds, at the image quality, at the radiation dose that we do. The radiation dose for a full body X-ray is 1/10 of a normal radiation of a normal size X-ray, which is about twice the size of this Finweek thing. So nobody else can do that. Then what makes it more special is the machine is so designed that there's no scattered radiation or minimal scattered radiation. It's being put in the ER center. Patients come in, get scanned, and doctors have imaging information within the first minute of arrival of that patient. Normally they wait 20 to 30 minutes for information for that. So they can immediately start and plan how they're going to treat this patient better, and we call it the golden hour, that first hour. Any time you save there is life-saving time. And that.
But I mean, just going back to the point that they haven't been able to make money yet, it would, I would think, scare away some inventors. I mean, who can sit around for 10 years unless you have got the IDC's backing?
So one of the things that really grabbed me about the story, so I mean, Bruce has a little text box on it, it's got Elon Musk or Marc Shuttleworth. We don't celebrate inventors in South Africa, and I think that it's a good news story from that perspective, because we don't celebrate innovators, we don't celebrate somebody who's actually put in the graft to put in something that can go onto the international stage. In the US, people celebrate Elon Musk left, right, and center. I mean, they talk about Tesla, they talk about spaceships, they really celebrate this culture. In South Africa, we don't have it. And I guess one of the questions that I would put to Pieter is, what are you going to do? You believe this will inspire the next generation of inventors and innovators in South Africa, and encourage people that we can actually develop local technology that can go onto the global marketplace?
Yeah, I firmly believe that. What happened so far is we've got a research program at the University of Cape Town that we do with UCT, Groote Hospital, and many more students are suddenly now interested in our program. They know about us now, know a bit more. In the past, we had to get a nice coffee machine to get them there. Now they come. So the brilliant minds, they start noticing this, and they are very interested. To get a support structure for them, to make it easier for them to get to all of these innovations, and then to make a business out of it. That is still the challenge. And I believe a place like the IDC, specifically through venture capital, through the past 5 to 10 years now, I'll start getting it better, and it's something that's getting better, so I suppose there will be a future for it.
I can only hope that this inspires venture capitalists, because one of the great complaints that you have from people with bright ideas is they can't get funding to do the job.
Specifically from the IDC in particular, because of their role, and the arguments that it's too difficult to work with them.
Correct. And I'm interested to hear what Pieter has to say on that particular point in terms of the ability of working with the IDC. But we've had some great South African inventions. It's not the prettiest thing in the world, but if you go along the coastline between Port Elizabeth and Kucha, There are these horrible concretey bollards, the Dolos. It was invented by a guy who worked at harbours and railways in East London. And he never patented it himself, and it's something that is stopping half of Africa from dropping into the ocean. It prevents erosion. It's a brilliant idea. Prattly Putty was on Neil Armstrong's moon module. We only know that because they included it in some advertising. Have these guys capitalized on these great stories? I don't think they have.
But this comes to the whole discussion around, connecting entrepreneurs with venture capitalists, with angel investors, and there is, a rising tide of that, and all these angel investing organizations. But still, you still speak to entrepreneurs, and the money's not there.
Yeah,
they can't source it.
But to Marc's question, how hard is it to work with the IDC? I've summarised this question.
I love the IDC. The IDC is our primary shield. So
they're 93%.
And they're continuing to give you capital.
And without the IDC, we would not be here. I mean, this technology would not be here today without them, because they funded it from start on, from the security device to get it to a medical device, and we on version 4 of our machine. So they were very good to us. But the IDC, people say it's difficult to work with them. I think difficult's the wrong word.
I'll rephrase it. How could they do things better?
They can do more what they do with a place like Lodox. I mean, they decided that Lodox, the technology is so good that we must get it to the hospitals, to people that cannot afford this, and help them to do it. So with the IDC, with Lodox, the IDC took special interest and help management and help networking and all other things other than just money. So many times it's just money, and there's an account manager that look at the account, but they've got a couple of accounts to look at. So with venture capital specifically, they start changing this model, and the industries like ours are getting much more help with them, more than just money.
A question for Marc perhaps is, maybe we just don't have enough brilliant ideas. Or maybe the brilliant ideas are stifled by the belief that there isn't the support.
Sure. I mean, look, I turn it around, and I think that I don't think the quality of the idea, I think that we celebrate the wrong thing when it comes to entrepreneurship. And that's why I find Pieter's story so interesting, in that we kind of use the Silicon Valley model, where we're looking for young kids trying to make little technology applications.
He's only 18, he's had a tough life.
But you see the life of the entrepreneur.
Exactly.
But I think we often celebrate the wrong things in trying to develop, we all want to be a Mark Shuttleworth and that kind of thing. But one of the best pieces of advice was ever given to me was, some of the best entrepreneurs are often into their late 30s, early 40s. Why? Because they've got a few battle scars, they're prepared to work as a team.
They've got a little bit of money to lose as well.
Yeah, definitely.
Always,
I mean, I think that they've got something to lose being involved in a project like this, and I think that that's where where we still get it wrong. We celebrate the wrong thing when it comes to entrepreneurship, and too often we're trying to make things that everybody else has commoditized. I mean, Pieter and I were chatting off air, where we were basically saying, this is something we could make plenty of devices in the medical healthcare space. It's something we could do really, really well, and we're not going to be competing against the Chinese for the cheapest possible product. And for me, that's why a story like this is awesome, because it says to people, think a little bit bigger than just your little IT applications. We can do something, but it's got to add value.
So are there brilliant minds in South Africa with ideas specifically waiting to be applied to the medical space? I mean, from those people that you're working with, and perhaps people working at Lodox looking at the next invention?
I'm working with rocket scientists. They're really, really brilliant minds. And I'm not an engineer. So when I started, I didn't understand some of the intricacies of all this engineering and all this technology. But I think that's quite important. Entrepreneurs need to know when to give over to business. I'm a business person. My speciality is to take something and fix it. And I think that helped Lodox as well. At the right time, I got involved, and we fixed the business. And we forgot a bit about the technology. Technology was great, and it's there, but nobody bought it. And that's what we did. So entrepreneurs need to know when to stop and give it over to somebody that can make money with us and start a business and go on with the next idea. Entrepreneurs are not always the best business people. And it's very, very difficult to give over. I mean, if you like the original team of engineers from De Beers, for example.
Yeah, it's your baby.
I think for them it's quite, now I'm sitting here and I'm getting the glory for this. And I said, but it's our product, we made it. But the world wouldn't know about the product if there was not a good business idea behind it and do that. And to translate innovation to business, that's where entrepreneurs battle sometimes.
Can I have one last quick question? Yeah. By when do we have the next 40 Lodox machines in circulation? It's 2013 now, you've delivered 40 so far. By when do we have the next 40?
I'll just go in a normal technology curve. So we took 10 years to get the first 40 in there. We'll take 5 years to get the next 40.
When are you going to be making a profit?
Next year.
Next year?
Yeah.
We'll have you on
this
show this time next year. Thanks for joining us. Good to see you again. Thanks, of course, to Bruce Whitfield, Pieter de Beer of Lodox, and Gavin Asmanovitz unfortunately wasn't able to join us today. You can read more about these stories and many others in this week's edition of Finweek. That's on shelves from today. The magazine also available digitally in English and Afrikaans via mysubs.co.za. It's time for a look at the Finweek Trade of the Week. Well, Reinet Investments is this week's trade of the week. Longing or shorting the stock?
No, definitely.
Longing, is that a word? Longing for it, perhaps.
For the purposes of the show, we'll long for Reinet. Yeah, no, I like Reinet. It's been one of those ones that's taken a lot of criticism because it's essentially it's been treated as a glorified hedge fund. A lot of money being taken out of it in terms of management fees, and for a big part of its time, it's been essentially a proxy for British American Tobacco, except you didn't get the benefit of a dividend. And I thought it was tied in quite nicely to this particular show that we've just had today, because Reinet's actually been investing quite aggressively in a lot of the technology startups in South Africa, and it's been getting involved in quite a lot of European and US assets in the private equity and venture capital space. And I think that now, I mean, the market's tough at the moment. There's not a lot of, and you actually want to start looking for investments that have got a little bit of upside to them, a little bit of blue sky. I think you can buy BAT. Anyone can go buy BAT. It's a good, solid business. But this is now looking like it's reached a point where Reinet's finally coming into its own in terms of a portfolio that goes and looks beyond British American Tobacco.
Mm-hmm. So good time to buy it. I mean, what type of valuation trading on right now?
Again, it's difficult, but it's not a hell of a transparent thing. You know, they own everything from hedge funds, which own bicycle shops, to British American Tobacco, to subprime, what we broadly term subprime, housing in the US. It's not a very transparent vehicle, and I think in a lot of cases you're taking a bet on your own Rupert. But at the end of the day, you know what you get. You know that
He's got a good track record. Let's be honest.
And I think that it's something that, if you want some big deals to be done, and you're looking for something like the next Facebook, or maybe it's the next Lodox, it's an opportunity to be being able to buy into some of these high growth opportunities while having a nice diversified portfolio.
Well, there we go, some food for thought for possible trade there to go long Reinet. It's time for a quick ad break. We'll be back with some insight and investment tips after this. Do stay tuned to CNBC Africa. Well, the latest edition of the tri-annual Finweek Supplement Collective Insight is out with the magazine this week, and at this time South Africa's top thinkers are looking at the question of investment fees and what you as the consumer should be paying for them. Joining us now at the desk, Thandisizwe Mahluchana, Finweek Deputy Editor, and Cabot Alitzhauser, Head of Alexander Forbes Research Institute, and Steve Price, CIO at Investment Solutions. Thanks for joining us. And I think I'll start off with you. Just give us a broad overview of, I suppose, not some of the key findings, because that could take us all day, but some of the key takeaways in terms of what's driving this debate right now.
Well, National Treasury, simple. I think probably the most awaited paper out of National Treasury is one that basically argues, are we charging investors too much money? And we thought that what we would do this time is maybe preempt the discussion. As you know, Collective Insight tries to go out to the industry and say, well, what do you think? And I think that's what you'll see in the publication. You'll see all different aspects of the value chain standing up and saying, here's where I think the value is, here's where I think the cost is, here's where things are completely out of line. And that's really what the gist of the publication is.
So is it the fact that you've got alternatives that are also delivering when it comes to returns? I'm talking about ETFs and passive investment options.
Yeah, well, I think it's all tied back into what you as an investor are trying to achieve. So it's all looking about what your risk tolerance is, whether you believe in active versus passive management. If you're an inherent believer that the best thing you can do is just get the asset allocation decision right, then you're probably going to tend maybe going towards passive investments. If you believe managers can add value, you go for active. So there's a whole spectrum where investors can slot in terms of the product or portfolio that they buy. That can determine, philosophically where they will align themselves with the fee debate. And really, fees for most large employee benefit or large pension funds, asset management fees I'm talking, can be anywhere from 20 basis points or 0.2% right the way up to 3 or 4% if you go into some higher risk, more niche type asset classes where performance fees become a factor as well.
Blunt question, but has the industry actually changed its approach to fees? Because there was very much an outsider's view that the industry was simply finding ways to build in fees. But then we actually start talking to a lot of the guys within the industry themselves. You can see that a lot of people have actually been quite active in terms of whether it's simple things like your TRs on your unit trusts, platform fees, they are coming down. Obviously it's a scale issue that plays quite a big part there. But just honest and bluntly, has the industry done enough to bring down the fees within the value chain?
Well, the way I look at it, I would tend to argue no. I think a lot of the work that the industry has done is slowly lowering fees. But if you have a look at it, a man on the street buying a unit trust through a 1,000 Rand a month debit order could still end up paying anywhere up to 3 to 3.5% per annum for the pleasure of his savings product. And with inflation running at 5.5%, 6%, he's literally got to get a return of 9 or 10% before he's actually generating any type of real return. Now, those have come down because we have seen the industry do away with a lot of fees like upfront commissions, initial admin fees. Those are all things of the past now, and fees in general are coming down, and the industry will take time to adjust. We've got 45 or 50 years of history in the unit trust industry now, and legacy that has to slowly readjust itself to global best practice and market forces.
Now, when this debate of fees came about years ago, many investment professionals who at the time would have worked or been working for some of the big investment firms and maybe insurance companies went on their own and really started small shops on the side, and when they approach the market, with really, really low fees. Now, how does that impact in terms of funds moving around, and how does now that put pressure on the big guys in terms of lowering fees?
Well, that is just a pure function of capital market forces. There are always going to be new entrants coming into the market. Investment professionals build up good track records at existing asset managers, and back particularly in the late 90s, early 2000s, we saw a lot of boutique managers coming into play. And I think the way that a lot of the industry has tried to adapt to that or stop that particular thing happening is that you've seen a lot of the life companies go the boutique model, where they're telling the investment professionals, you don't need to leave and go and set up your own company, because we'll offer you a small portion of the equity or the profit in a smaller niche business within our broader life company. And that's very attractive to a lot of investment professionals because they get all the benefits of a compliance infrastructure, and compliance is becoming regulation, and dealing with that's becoming a major issue. And if you can plug into an infrastructure, well, I think that's a very attractive.
I think one of the issues, though, is that, I think your own research says you need 2 billion in assets under management just to be a credible small asset manager. You go and you land at or Tambo or Cape Town International Airport, and it's plugged with all the big name asset managers, those that can afford TV commercials, etc. And people become so used to supporting the same. How does the small guy get their foot in and therefore impact the value chain?
What are your thoughts, Anne?
Well, are we talking about fees now or survival? Because I think...
Aren't they linked?
Yeah, I'd argue they're linked.
I think, your big problem in this whole debate is, where is the consumer? And one of the most interesting things that happened in the wake of the crash, 2008, the Financial Times came out with an article that said, of all industries, asset management has less consumer advocacy than you would imagine. And much of it is because of this whole asymmetrical information thing. Now, what do we mean about that? There's an awful lot that I understand about investing because I'm a professional. I know how much skill can translate into performance, and I know how little that is. But if I tell you all those little secrets, will you pay me still? And the irony is the investor will pay you because they want to believe. They want to believe that you can deliver the goods. I don't mean you, Steve, but your team. And so, in a sense, you have this friction that you have asymmetrical information. You don't really know what's driving performance. You don't really know to what extent can I give the manager credit. But you've also got someone who's refusing to take the money off the table because they say, but please, I want to win.
Fair enough. So then let's go and talk about the role of the advisor in that as well, because a lot of the advisors tend to go and support the same, they buy exactly the same argument, surely.
Well, they also want to make their job easy,
yes,
right? And how do you make your job easy? Well, let's see, who's got the billboard up in the Cape Town office, Cape Town Airport, and I don't have to sell twice. And that was the dilemma that a lot of small asset managers face. First, they had to sell their credibility as small asset managers as being able to survive. And then they had to sell whether or not they were, investment experts.
Let's talk about performance fees and the debate, the discussion that is going on, how much you should charge for performance. Where do you stand in the argument right now?
Yeah, so we are advocates of performance fees. So we believe they have a very important role to play in crafting an overall remuneration structure for an asset manager. What we are very much against is the way that the industry has total flexibility in terms of the way it structures performance.